Hi everybody, I was recently asked by two members of Republic of Old Souls, one in Canada and one in the UK, to research on behalf of Ecclesia Law the mortgage securitisation question, which has eluded nearly everybody who has tried to use it in a courtroom. So I did a very deep research into the problem that most people have had when they have used mortgage securitisation arguments in courtrooms. Now, these two members are actually facing mortgage foreclosure, so it's a very difficult problem to face. And so what I did was I looked at the normal presentment that people use or have used in courtrooms when they're facing foreclosure, or when they are claiming that the mortgage is void because of what's called the registration gap that is caused by the mortgage securitisation. So if you understand what's going on in mortgages, the mortgage provider creates the mortgage with ex nihilo credit creation. That is from the mortgagor, that's the borrower, the alleged borrower's signature. And what they then do is they create the mortgage liability, which is a mortgage security, and they sell it to the investment bankers, typically in New York, often known as the indentured trustees. Now, the point when the mortgage is sold to the mortgage indentured trustee, the investment bank that's holding the mortgage security, there is a registration gap, because no longer does the mortgage provider hold the actual, they haven't actually got the debt. They're not the provider of the debt anymore, the alleged debt, and it causes a registration gap. And there's actually a book written about this by a very senior member of the land registry in the UK called Elizabeth Clark, and she wrote a book called the registration gap. And many people have tried to use this in courtrooms and have, from all the research I've done, nobody around the world has ever succeeded with the mortgage securitisation argument. It always fails because the courts say, well, the mortgage provider has a legitimate charge over the property, and irrespective of what may be going on with regards to mortgage securitisation, the actual mortgage charge itself is there, and that's all the courts look at. So what I did was I looked into whether that is true or not. Does the mortgage provider have a legitimate charge over the property? They can only have a legitimate charge over the property if there are a number of factors in place. One of those factors is that the mortgage provider is actually the creditor. Did the mortgage provider actually lend money? Now, many people have tried this argument as well in courtrooms by saying the mortgage provider, didn't provide consideration in the loan. They didn't actually provide the funding, and those arguments have typically lost as well. So I look much deeper than that. Now, the problem that nearly everybody's had when they are facing the question of how to void a mortgage is the fact that they don't have proof that the mortgage provider wasn't the provider of a loan. So if you can't prove that, then you have great difficulty in voiding a mortgage. Well, in terms of what I've been working on, I've been looking into how we could use the signature credit process, that is the Clifford protocol, where we identify the signature credit from the clearing bank, is then sold on as securitisations into the investment banking market. And if you've read my research papers on the Clifford protocol, and somebody recently said that the whole process of credit recoupment, signature credit recoupment, deserves to win the Nobel Prize. Well, I went one step further than that and started looking at how could the verification and proof that signature credit actually creates the mortgage itself, how could that be used by mortgage holders? Well, if you understand the process of what's going on with signature credit recoupment, the first step is to is to create an international grantor trust. And that international grantor trust files 1099 OID and becomes what's known as the holder in due course of the credit. Now, that status and that standing with the United States Treasury causes the presumed holder in due course, which is typically an investment bank in New York, they no longer can presume to be the holder in due course, and therefore they're not the creditor. So in the case of a mortgage, the mortgage provider, which is normally a clearing bank, takes in the signature from the alleged borrower, creates the mortgage itself, ex nihilo, out of nothing, really, out of the signature, matches the credit that is being deposited by the mortgagor, that's the borrower, the alleged borrower, with a matching liability on their balance sheet, sells that liability, which is the mortgage security, to the investment banks in New York. And then the investment banks in New York pay taxes under their 945 tax modules for the use of that signature credit. And it's those taxes that members of ours that are engaged in the in the signature credit recoupment are getting their recoupments confirmed by the IRS. And as I've mentioned and reported on in previous videos and webinars and interviews, we had $600 million of confirmed IRS recoupments for members of Republic of Old Souls in 2025. So if you look at this from a different lens, if the mortgage if the mortgage itself is being securitized, which nearly every mortgage has, and if the investment banks in New York are paying taxes under their 945 tax modules for the use of the signature credit, when the International Grantor Trust that's been established files 1099 OID, what that actually does is it changes the standing of the investment bank from being presumed as the nominee and creditor to being the actual debtor. And if the mortgage provider has securitized it, which they normally always do, and the investment bank that is holding the mortgage security is no longer the creditor, as the record has been corrected via the filing of a 1099 OID by the grantor trust, that is now the lawful holder in due course and is basically the creditor. And the beneficiary of that grantor trust, which is the living man or woman that provided the credit energy through the signature, is going to now receive the recoupment of the taxes that the investment bank has paid on that signature credit. That's what's going on in terms of signature credit recoupment. But if you look at it from the point of view of a mortgage, the reason why the mortgage itself is void is basically all described in this report. And it all comes down to IRS publication 1212. But the filing of the 1099 OID via the grantor trust, which has been established for the signature credit recoupment, voids the mortgage, because the mortgage charge itself is predicated on the fact that the mortgage provider, the clearing bank that allegedly provided the mortgage, actually lent their own money. Well, those people who've studied mortgages and studied ex nihilo credit creation, as I've reported in all of my recent research reports, knows that the banks don't have money to lend. And when the record has been created at the top of the ledger, which is it's the United States Treasury, it's the highest point of all of the debt and credit ledgers, then what you've got then is a situation where the mortgage at the top of the ledger with the investment bank that has been basically presuming itself to be the creditor, that record is then being corrected. And on the basis that the record is being corrected via the filing of the 1099 OID, because of the grantor trust newly recognised status as the holder in due course, that means that the mortgage itself, the mortgage security, has been reversed. The presumed creditor, the investment bank, is not the creditor, they're the debtor, and that invalidates the charge at the local level. So where the mortgage provider, the clearing bank, is operating in whichever country that is, there is now a disconnect because the mortgage has been proven to the alleged creditor, the presumed creditor. The investment bank is not the creditor; they are in fact the debtor, and that means that the mortgage provider is no longer presumed to have a valid charge in law because they are also the debtor. So if both the mortgage provider and the holder of the security, that's the investment bank, are now classified as debtors, not creditors, then that would invalidate the charge at the land registry or wherever the mortgage is registered. It's different in different countries. Now, what I did was I created these two very, very detailed mortgage securitisation reports. One for 𝐷𝐞𝐻 Bank, which is a UK bank, and this report here was published on our Telegram channel yesterday. You can read this, all the reasons why the mortgage is void. And then I did this report here, which is 𝐼𝐻𝐻 Bank from Canada, and why all of the mortgages that they provide are also void on the same basis of the fact that once the record at the top of the ledger has been corrected, then basically the mortgage itself, the charge at the local level, can be lawfully removed because the alleged creditor becomes the debtor. That's the mortgage provider and the securitisation holder, which is the investment bank. In this document here, Void Mortgage Protocol, it discusses the whole process from A to Z. I will be running a webinar on this coming up very soon if there's enough interest in it. I think members would be very, very interested to study this because with the cost of living crisis that's going on all around the world, the mortgage is probably the biggest expense for most families. If there is an appetite to void mortgages, this process will enable members of the Republic of Old Souls that become envoys to actually run their own cases using an AI system that we will develop and roll out to our envoys, and using an avatar, which is basically all of the knowledge and research papers, all the webinars and all of the Q&As that I do is all put into a knowledge base to assist the envoys with basically questions and forensic research and outputs from the avatar on how they can run their own cases using AI to produce all the documents that they will need to void the mortgage, whether it is a mortgage which is currently being funded or whether it's a mortgage in arrears and it's mortgage foreclosure. This process aims to assist and facilitate for envoys of the Republic of Old Souls the voiding of their mortgage, the recoupment of the mortgage security, the spend and recoupment cycles from the recoupment of the mortgage security, that is the face value of the mortgage, and then the transfer of the property into an asset fortress, which is an international grantor trust, to safeguard it and also improve massively potential tax liabilities, to remove tax liabilities from the profit, and also to lawfully avoid the future effects that will be experienced by billions around the world of the digital ID. So if you're interested in the subject, I will be running a webinar on this very soon. Have a look at this Void Mortgage Protocol document. Have a look at the 𝐷𝐞𝐻 Bank. Have a look at 𝐼𝐻𝐻. You can find them on the Telegram channel. Winning Monopoly, how to win the game of Monopoly, our Telegram channel. And come to my webinar, which I'll be doing very shortly.